So you must be pleased today, given those earnings that were reported for last quarter, Bill.
Well, it's always good to see your companies are doing well in the short run, there's beginning to be so much doubting of this economy, and so much doubting of the strength of the home repair and home building market that people were just looking to steady the ship here a little bit today.
So Bill, when we see a Home Depot doing well, is that an indication of a strong economy, or might it indicate there may be some fractures in the economy? That is to say, people need to repair their houses rather than buy new ones.
Well, you know what? The beauty of Home Depot, the next 10 years is probably going to be the greatest era that the company's ever had. And the reason is the homes in the United States, the standalone homes, have grown dramatically older in the last 20 years. So the average existing home is about 38 years old, and I know from homes that are only 15 or 20 years old, you have a lot of things that need repair. So just imagine at 38 average age how much repair there is. And secondly, the baby boomers are going to be the first generation of people that stay in their homes all the way into their 80s. Their health is better than prior generations, and so they're going to stay in those homes. Then simultaneous to that, the millennial group is new to home ownership and just rising as we speak in the 30 to 45-year-old age range as homeowners, rather than 23 to 35 like prior generations entered home ownership. And they're more affluent, and we've got to build an awful lot of homes to satisfy that demand because their parents are staying in their home a lot longer. So it's going to be a great 10 years, and the market, we think, is making a big mistake to spend a lot of time dwelling on, is there a little bit of softness right now because the condos went down in New York City.
Is there something to be said, though, that if you're looking at a shorter-term environment of rising home prices and housing indicators weakening, which is a good environment for Home Depot, is that bad for other sectors, bad for other equities?
Well, the connection to the equities market, we think, is even more profound than that. And that is that in the last 8 or 9 years of relatively anemic economic recovery, right, prior to, say, a year and a half ago, people were really excited about companies that could grow in an anemic environment. And secondly, the Fed was amazingly generous for a very extended period of time, and common stocks and bonds soak up excess liquidity when there's nothing on Main Street to do with it. But over the next 10 years, there's going to be lots of things to do on Main Street, and capital will be demanded. So we think that we're seeing the beginnings of a shift from revenue growth stories, mostly associated with technology, to Main Street stories. And, of course, Home Depot has done pretty well in the old story, and they probably should do pretty well in the new story.